Okay, we're hovering around that 69,000 level. And I think the one thing that sticks out at you when you look at this chart is how quickly we went from the top all the way down to the 200-week moving average. Because here we're looking at the 200-week moving average on the charts. And that's got people asking whether this is this 200-week moving average is the level at which the previous couple of bear markets actually ended. And since we hit here so quickly, it brings us back to two questions. The first question is this what they're calling a left translated cycle? Now, when they talk about a left translated cycle, they say, look, maybe if you go up, if you go down very quickly and you hit the bottom very quickly, then you can bounce very quickly. And as Ben Cowen says, he says that case can happen, and we could actually happen in May and basically bottom in May and keep going up. The other point is that if we are going to go further down, and because we've hit this 200-week moving average so quickly, then where is the bottom of the downside? How low can we actually go? Because remember, our base case was kind of saying, look, in the previous bear markets, when we hit the 200-week moving average, that was pretty much the end of the pain, right? But in this cycle, we're 15, 16 weeks from the top, and we have just almost hit the 200-week moving average. So then the question is, how low can we actually go? And I actually want to show you the data. I want to show you how low can we actually go, how quickly this bear market can end, how late this bear market can end, so that we're all prepared. Now, I'll tell you the truth. When we set out to make the show, I didn't actually have the data, right? So I had a certain number in my head. And to be honest, that number in my head was about 58,000. And I don't know why that was the number in my head. It was just a number that I had in my head. And I said, I kind of think that the bottom is going to be around 58,000. And I wanted the data points to actually back it up. But let me tell you that that's not the number. Okay, now I'm going to show you exactly what that number is during the show, but it's not 57,000 or 58,000. So without further ado, let's get the show on the road, guys. Another day in torture land, and I call it torture land. You know why? Because we just can't get a bounce. We just can't, like as they say, you just can't get it up. We just can't get this price up. Funny enough, I read this tweet over here that AIXBT said Bitcoin just printed a 5.5 standard deviation move. This has happened 13 times in 5,000 plus trading days since 2010. Every single occurrence preceded multi-month rallies. March 2020 at 3,800, December 2018 at 3,200, January 2015 at 200. Stochastic RSI hit the lowest reading in recorded history. The data is screaming, the data is screaming buy, but most will actually wait. Now, the truth is that no matter which metric you look at, they're all telling you that we should be getting a pump, right? So you look at this metric, it's telling you that you should be getting a pump. If you look at the Bollinger Band width, they're telling you that you basically should be getting a pump. But ultimately, if you look at this data over here, if you look at the route from the top all the way down to 200-week moving average, it's basically telling you that you should be getting a pump. And we ain't getting any more pumps. And one of the things that 𝗕𝗧𝗖𝗖 said, he basically said, by the way, he's the founder of CryptoQuant. And he basically said, look, right now, Bitcoin is not pumpable. And what he means is, he means that whenever in the previous markets, when you put like 10 billion in cash, that would create 26 billion in Bitcoin book value. In 308 in 2025, the whole year, $308 billion flowed in, and the market cap actually fell by 98 billion. And basically saying the selling pressure is too much. Basically, it's saying that right now there's so many sellers that we just can't get a pump. Now remember that in order to get a pump, we need that reflexivity, because we get a pump, therefore the asset, and then the asset becomes more attractive. As the asset becomes more attractive, the DATs can raise more capital, the DATs raise more capital, and that kind of feeds that loop. So what we need, it's almost like the chicken and egg. We need the pump in order to get people into the asset, in order to create more pump. But right now, no matter how much money we're actually getting in, we're not actually getting that pump. I want to talk today about what's actually happening and why this is happening, and what the potential bottom is for Bitcoin. As I said, it's not 57,000. But before I do, remember, I wasn't here yesterday. I was feeling kind of down. I had a stomach bug. So I need your help. Just help me by smashing the like button. It really does help us get distribution. Also, like, some big news, guys. Like, next week, I'm not going to be here. Next week, I'm going to Mar-a-Lago. Believe it or not. Hardest, you know, next week I'm going to Mar-a-Lago, bro. I've been invited to Mar-a-Lago. Can you believe it? So next week I'll actually bring you live coverage from Mar-a-Lago. And I'm not going to tell you why I'm going there. I'm going to tell you why I'm going there. I've been sworn to secrecy as to why I'm going there. But I will tell you when I'm there. Hopefully I can leak some things to you when I'm actually there. Anyway, in the interim, let's go back to it. So Ben Cowen says that what's happening now is pretty normal. He says, look, in the post-halving year, in the midterm year, we see a lot of weakness going into early February, followed by strength into early March. But Ben also said the following. He says, the most likely low for Bitcoin is October 2026. That's based on the 4-year cycle. Now, just a heads up on that low of the 4-year cycle. So what's scary about the low of the 4-year cycle is that if you go to the high and then you go to the low of the 4-year cycle, that usually happens at 200-week moving average. You can see it over here. You can, if you call that a high, you can see it over here. You can see here was a little bit of an exception. Remember, we had the big deleveraging events, and here we actually went low in the 200-week moving average. But if you look at the time where we actually hovered around this line, talking about somewhere between June and August, and we bottomed somewhere around October and November, and that's when we actually started to move up. So generally, if we follow the 4-year cycle, then this bear market lasts until October. Under some circumstance, it could happen as early as May. Bitcoin does not have a monopoly on the 4-year cycle. You can see that the S&P has gone through many periods where it has the bottoms, where it approximately bottoms every 4 years. October would be favored if we get a multiple week to month-long counter rallies. May would be favored if counter trend rallies in just the last few days to a couple of weeks. And so basically, there is the scenario that maybe this is a left translated cycle. Now, what do we mean by this left translated cycle? We mean that things are happening much quicker than they should be happening. So like, let's say we get the Bitcoin high. Let's say the Bitcoin high happened before it should have happened. Then that would mean that we're in a left translated cycle. Now, the last bull market, people said we were in a left translated cycle. Why? Because if you look at the ETF pump, which happened when the ETF was approved, then it happened much earlier than the cycle should have topped, right? So what are the indicators that show us that maybe things are happening faster than normal? And the big indicator that tells us that things are happening faster than normal is this tagging of the 200-week moving average. So you can see that in 2017, that took us all the way from here all the way down to October. That took us like a year, basically, to tag the 200-week moving average. If you look at the 2022 cycle, and the 2022 cycle is pretty interesting because let's say that we did top on the 8th of November, and we look at when we tagged it, you're talking about 6 months, so 217 days. And if you look at top to bottom, as I said before, the bottom actually happens about 365 or 375 days. So generally, in the 4-year cycle, you tend to bottom somewhere around 1 year after the halving cycle. But this time we tagged the 200-week moving average 17 weeks instead of 31 weeks or 52 weeks or 59 weeks in the previous cycles. The other thing which we broke down very, very quickly is you can see if you look at moves from one moving average to another moving average. So let's say from the top to the 200-week moving average, 59 weeks, 52 weeks, 31 weeks, 17 weeks, a much faster, much more aggressive bear market. If you look at time from the 50 to the 200-week moving average, 22 weeks, 29 weeks, 26 weeks, 13 weeks. It means the veracity of the drop is double as aggressive, right? If you look at this over here, if you look at how long it takes to get to peak fear and greed. Now we were at peak fear and greed at a level of 6. If you look at, pretty much everywhere that you look, things have happened much quicker than all the previous cycles, right? And you can see that here now we're at peak at the fear and greed of 9. So there is a chance that things are happening much quicker. And if they do, then let's hope that we bounce and that we get the bounce in May. The question then becomes, how low are we going to go? And this is where the data gets a little bit scary. So to be honest, as I said to you, when I made the show, I didn't know what the answer was. I thought the answer was somewhere around 57,000. My base case for this bull market was that we would tag the 200-week moving average. But the base case has to change when you tag it after 17 weeks of hitting the top and you still don't get a meaningful bounce. So how low can we actually go? Now, spoiler alert, I'm going to give you the answer and then I'm going to actually show you the data. So the number looks like it's somewhere around $40,000. Okay, I know it's scary and I know that I probably should have kept that to the end, but I want to show you why $40,000 does seem like a likely worst case scenario, so to speak, and also a scenario where all the data kind of merges. Now, again, I want to just say for the record, no one can tell you, no one's a fortune teller, no one can tell you where we're going to go. The base case for me was the 200-week moving average, but that 200-week moving average we're so close to it that it would be quite weird if we just jumped up here and basically considered the bull market. Hey, it is an option. It's just not the most likely option. So, as I said, the base case, 1 year long bear market, that's the 4-year cycle. It means that, how many days do we have? How many days have we got left? Let's actually work it out. How many days until October 10th from now? Let's quickly just ask ChatGPT. I'm hiding my chat history so you guys can't see what I've been asking ChatGPT because I've been asking a lot of questions lately. How long until October 10th? It's counting the days. I mean, I could probably do this arithmetic in my head faster than ChatGPT. Bro, you don't need so many days to work this out. Can you believe this? I can't believe how long ChatGPT is thinking. Anyway, that's the best case. We'll come back to ChatGPT in a while. Scary shit. No, come on. You cannot let me down. Okay. 8 months, 242 days. So we could have another 242 days of the bear market. Why the hell did that take you so long? How dumb are you? Okay, no, I'm joking. I really hope ChatGPT. I'm going to get sued by ChatGPT for abuse. Next time I'm going to just use Grok. You're allowed to roast me. I deserve it. Now hit me up with the next one. I'll keep it snappy. Okay, let's actually ask it. Who is faster? You or Grok? Holy shit. He just admitted. Okay, let's carry on. So, the base case says there's another 242 days till the end of the bull market. Here's the part where it gets worrying. This is the fractal of the 2026 correction versus the 2022 correction. And the problem is that they're tracking each other like line for line, basically. I'm not usually a big believer in fractals, but they are tracking each other line for line. The only thing is that if you look at where the 200-week moving average was, let me show you what the scary thing is about this calculation. So if you take the top to the 200-week moving average in 2022, so that's where it is, top 200-week moving average in 2022, it was a 70% dip, right? The problem is that here, the top to the 200-week moving average is only a 50% dip or 55% dip. And so we're tagging it quicker, but obviously the distance is much, much, much lower. Now, part of that is because we never got such an aggressive bull market. And I thought because we didn't get such an aggressive bull market, we're not going to have such an aggressive bear market. Seems that unless we bounce here, I was probably wrong with that. You see, in 2022, what happened was we put in the low. So we went down here, and then once we broke the 200-week moving average, here's the part where it gets scary, because we broke the 200-week moving average here, let's call it, and then we still went down 33%. So then you got to ask yourself, okay, if we are really tracking this 2022 fractal as closely as we're actually tracking, just much, much, much quicker and much, much, much more aggressive, then let's look at what happens if we go down another 30%. So that number basically says to you, okay, so we are here, let's go to here, and so, okay, let's say we tag that 200-week moving average somewhere here, and we draw the line down 30%, that number takes us to exactly $40,000. Now, here's where that number gets a little bit freaky, okay? So remember that if we just follow the 2022 cycle, again, things are happening much more aggressively here, and we go 30% below the 200-week moving average, that takes us to an average price of $40,000. Now, here's where it starts to get freaky. So look at this, right? If you look at all the previous bear markets and you say, okay, in 2017, we tagged the 200 a simple moving average. In the next market, we tagged the 300 moving average. Then we tagged the 350 moving average. The next one is at the 400. Like logically, every cycle we've tagged a 50-day moving average high. So 200, 300, 350, 400. That number is at 39,747. That's the exact number that happens if we go 30% under that level over there. Okay, then I look at another thing here, and I look at the Sharpe ratio. Now, what does the Sharpe ratio actually show us? So the Sharpe ratio shows us more or less when we're going to bottom. So you can kind of see where we are at the moment. And I mean, let's just see if we can zoom in here. Okay, so come on. Okay, so what you can see here is the Sharpe ratio shows us more or less when we're going to bottom. So we've just entered this zone, and if you look at the price of Bitcoin when we entered this zone over here, so look at that. So the price of Bitcoin was 24,000, okay, more or less. And when did we bottom? We bottomed at 16,000. That's about a 30% drop, 35% drop, which is exactly where we are now. And if you take where we are now and you drop 35%, where do we get to? We get to 40,000 again. Okay. The next thing that I want to look at is the MVRV score. And again, you can see that if you look at when we bottomed, so you see where we are today. The Bitcoin price was here. It was, we can look at market cap, yeah? 362 billion. And when we hit the bottom, so what was the price when we actually hit the bottom? 317. So again, it shows us that there's a little bit more downside here. Then, so those, when you look at those things, they all kind of tell you that the downside here may be around $40,000. Then we look at a very simple metric here. And the very simple metric basically says, okay, well, look, let's go to the first bear market. That was an 87 or 88% dip. Let's look at the second bear market, 83% dip. Let's look at the third bear market, 77% dip. And that means that if you like kind of take this on a linear thing, you say, okay, 86, 83, 77. Let's talk about, I don't know, a 75% drawdown top to bottom. What would a 75% drawdown top to bottom give us? So let's just go back to the top here. Let's bring that down 70%. Takes you back to the 40,000 level. So again, like when I set out to make the show, I didn't actually have a level in mind. And I kind of thought, okay, well, let me look at the different levels, and I was kind of hoping to come out at 57, but there are multiple indicators that are basically bringing me down to 40,000, right? Here's one that actually gives us a little bit of hope here. This is where I got my 57,000 from. Actually, I didn't get it from this, but this was an indicator that kind of said it. And he said, it's looking at the electrical cost of mining Bitcoin. Now, why is the electrical cost so important? Because that's the variable cost. Everything else is pretty much a fixed cost, right? Like you buy your miners, you use your miners, etc., etc., etc. But the one cost that is variable and decides whether or not you should actually switch on your machine is like your rent is fixed, your machines are fixed, to a greater or less extent your staff are fixed. But the one thing that's not fixed is in your data. Once you've got internet connectivity, you've got internet connectivity. The one data point that is actually not fixed is is your electricity, and therefore you want to keep Bitcoin above the electricity cost. And the electricity cost right now stands at like $59,000, right? So now obviously this is going to change, but you can kind of see that right now the Bitcoin electrical cost is $57,000. The miner's production cost is $72,000. So bear in mind that on average, the miners mining Bitcoin are actually losing money, or they were losing money until we had the difficulty adjustment last week. We had like one of the biggest difficulty adjustments. Why? The reason why we had that difficulty adjustment is because it just wasn't viable for the miners to actually stay on the network, right? And the problem is that, as I've said before, that it's not that it's not only viable, it's that the same miners are now plugging their machines into AI farming, and the current yield on AI data centers is much more profitable than it is to actually run Bitcoin. And so what we needed, I mean, the Bitcoin algorithm adjusts for that. And what we got a downward adjustment. You can see that we got a real downward adjustment from here. So that's the other one. So another thing that to probably look at is the realized price. So usually you can see Bitcoin maybe sometimes breaks just below the realized price. We haven't broken below the realized price yet. Right now the realized price is 55,000. So again, if you look at previous bear markets, we actually break a little bit below the realized price, right? So below realized price. Again here, just below realized price. And so if we break below that, and that's sitting at 55,000 now, then again, that 40,000 magical number basically starts to surface again. So again, what's the conclusion here? So no one can tell you where the market's going to go. I think the best thing here is to protect yourself and prepare yourself for the worst. I'm not saying that is going to happen. I mean, it could happen. A lot of data indicators say that is the worst case scenario. I can't tell you whether it is or isn't going to happen. We could get a bounce here. We might not. If we don't get a bounce, then we carry on going down. If we carry on going down, then, as I say, most data that I looked at, and again, what I wanted to show you here was the data, I wanted to show you that we can actually continue to go down all the way down to 40,000. Can we go below that? I mean, I guess we can, but I don't see. I mean, that would be like a real capitulation. I don't know. I don't know what would happen if we actually did that. The one good thing is that a lot of the selling is coming from like old Bitcoin holders, and a lot of the buying is actually coming from ETFs. So I did actually ask ChatGPT yesterday. I said, like, how much of the buying is actually? Let me see if I've actually got this. If I've actually got that chat. So I looked at this. Yeah, here it is. Here it is. So what I did was I asked ChatGPT and I said, look, just tell me what's going on with the Bitcoin ETFs. And basically what it says is, on July 10th, 2025, BlackRock held around 700,000 Bitcoin, and I wanted to see if generally the multiple crypto data sources estimate that US spot Bitcoin ETFs collectively held 1.28 million. Now the question is, after 10th of October, did these guys actually sell? And the answer is like barely. Like these guys didn't sell. They basically just carried on hodling. So it does mean that the selling is coming from effectively the Bitcoin OGs, which is like that changing of the guard. And maybe that's the phase that we're in, where the people that wanted to sell, and the new Wall Street ETFs and that basically start buying. Yeah. So a couple of people have asked me like what's my position as it relates to holding tokens right now, buying tokens, etc., etc. So given the fact that there is so much downside, I don't see how you would deploy more capital now. If you're not holding a crypto portfolio, then the truth is maybe it's a good time to actually start deploying, because you want to start dollar cost averaging when the prices are low, right? The thing that what I did is basically I've taken my entire portfolio and I've put my entire portfolio into 11 assets. That's it. So believe it or not, like this is someone who used to have 20 and 30 assets in my portfolio. I've narrowed it down to 11 assets. And what I'm going to do is tomorrow, or maybe even Friday. So actually tomorrow, I don't know, either we'll drop it tomorrow or Thursday. We've got Ben Cowen on Thursday. So what I'll do is I'll actually drop a video that shows you the 11 assets that I'm holding and why I'm actually holding those assets. And I think you'll be quite surprised as to what I'm holding and what I've actually chucked. And that really is what my portfolio looks like. And the reason why I'm holding these assets, and I'll give you an example, like it's assets like Coinbase, is because I'm kind of saying to myself, look, I don't know which tokens are going to be quantum resistant, and I don't know which ones are and which ones aren't. But I do know that regardless of who they are, Coinbase will still be around and trading those tokens, right? And so right now you kind of say, okay, well, on a risk return basis, surely Coinbase is the best place to be at the moment. And that's really how I'm starting to think about my crypto investments until the market actually gives me a sign of life. Again, I'll give you an example, and I don't want to ruin the video because it actually took me a long time to make and think about. But if you look at Coinbase's, like Coinbase is down 65% from its all-time highs. Like, I don't know if it'll ever get back to those levels. And I think the best thing that can happen now is that Scott Bessent and Brian Armstrong put away their public spat, because they've got this public spat going on, right? So that's it for today. I just want to say something to you. I was reminded again of this today. So I told you I'm flying to Mar-a-Lago next week by special invite. And so I needed to buy a ticket. So I just want to give you the economics so that you actually understand this. And I don't usually share how much money I spend on a ticket or whatever else. But so I use my Cast card. It's a solid gold crypto credit card. You've all seen this before. You can basically link a crypto wallet to a card, right? And I try and use this for all the big purchases. Why? Because I get like 7% back. So I spent like $5,500 on a ticket. I got like $400 immediately back into my account. Now that's like proper money. You're buying something which you can't, you're swiping at $5,500 for a plane ticket and you're getting like $400 back immediately. Now, guys, if you want these cards, so there's a link below. Here we go. So let me show you what it is. So link below over here. And if you want that to get a card, so I think what I'll do is if you sign up between now and when I get to Mar-a-Lago, then I'll find 2 people that have signed up and I'll actually give them the gold card. The gold card is a solid gold card. I mean, you can. So I can only give away 2 though, unfortunately. So sign up between now and Tuesday when I get to Mar-a-Lago, and yeah, it's amazing. You also get an app, and the app you can basically. You see your spend and you see the money back immediately. It's the coolest thing. It really is one of the coolest cards and one of the coolest things in crypto. Sign up if you want a gold card. That's over there. I also see that BTCC, which is the other sponsors, back on giving 10% deposit bonuses. That's the biggest hack in crypto. You basically put like $10,000 in, and then you get $1,000 that you can trade with, and you trade with $1,000, and then you remove your $10,000. You get it? So simple. All right, I'll see you guys again tomorrow. Until then, trade well, my friends.